Welcome back, my friends. Well, the list of companies laying off employees just continues to get longer. Well, today, we hear the announcement that Philips is laying off 4,000 employees. We do not really hear so much about Philips these days. Philips has trended to becoming more of a medical equipment company and less of a consumer products company. Also, Philips is primarily a Dutch company with its headquarters in Amsterdam. But, Philips has a huge amount of business in the United States, mostly related to its healthcare business. Generally speaking, Philips is a conservative company. But the macroeconomic environment has deteriorated dramatically. This video continues our coverage of the wave of layoffs sweeping the United States. What does it mean for big tech companies? What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Philips just crowned a new CEO a few weeks ago. And basically, his first act in office is to cut around 4,000 jobs. Philips sales are now falling in the softer macroeconomic environment. And the company also had a disastrous product recall last year. Philips stock is down 70% in the past year. We have now had 5 quarters of declining sales, declining profit, and now in Q3 we also have become loss-making, said CEO Roy Jacobs. You really need to work your cost base to stay competitive and to support your profit, Jacobs continued. I am also looking at simplifying the organization, Jacobs also added. Jacobs said that the layoffs will be primarily in the United States and the Netherlands. And naturally, business units with declining sales will be most affected. Jacobs also added that demand for Philips products is slowing rapidly in China. Business in Western Europe is also in decline, mostly because of inflation. On the positive side, business in North America continues to be strong. Jacobs ascended to the CEO position as Philips tries to deal with the fallout of the costliest product recall in company history. Last year, Philips had to recall its latest respiratory machines because of a potentially toxic foam. And like a lot of other companies, Philips is suffering from supply chain problems. The layoffs will affect about 5% of the employee base. Philips has 78,000 employees. The company plans to take a one-time charge of $295 million related to the layoffs and the product recall. And it lost $1.3 billion in Q3. Due to a write-down in the value of its. The recalled product was a sleep and respiratory machine for sleep apnea. Philips and the U.S. Justice Department are discussing a settlement related to the recall. Sales fell 6% in Q3 as compared to Q3 of 2021. Jacobs cited supply chain problems in discussing the huge loss. Those involve both shortages of components such as microchips, as well as unexpected stops and starts of availability, Jacobs said. He added that he is focused on getting the recall completed as soon as possible. Philips' market capitalization is down by $30 billion since June of last year. That is when it recalled 5.5 million ventilators that are used by people with sleep apnea. There were concerns that foam used to make the CPAP machines could become toxic. In case you missed the announcements, just let me have a quick run through of the companies that have announced layoffs in the past few months. Software giant Microsoft is cutting 1,000 employees. HelloFresh cut 611 workers' employees and closed their Richmond, California warehouse. Beyond Meat is cutting 19% of its workforce. Software giant Oracle cut 201 employees and moved its headquarters to Austin, Texas. Chip giant Intel is cutting 22,000 of its 113,700 employees. That is a cut of about 20% and comes as the company is experiencing a rapid deterioration in revenue. Shares in Intel fell by half in the past 12 months. San Francisco-based Brex is cutting about 12% of its employees. Peloton is cutting about 12% of the company, which is about 800 jobs. It is also closing stores, rejiggering its distribution network, and raising prices. SoftBank is cutting 30% of its employees. This comes after the investment company lost $23 billion in single quarter. San Francisco-based DocuSign is cutting 10% of its 7,400 employees. Wells Fargo Bank is cutting 36 in the next in its series of layoff rounds. In total, Wells Fargo has laid off 400 people this year. In a similar move, Google also alerted about 50 employees. Google cut half of the projects in its startup incubator called Area 120. But these cuts are rumored to be just a warm-up for Google, as the company is said to be conducting stealth layoffs over a longer period of time. Nordstrom is cutting 231 jobs at an Iowa distribution center. Gap is cutting 500 corporate jobs at its offices in New York and San Francisco. Drug giant AbbVie is laying off 99 employees. Fellow big pharma player Bristol Myers Squibb cut 261 jobs. Last month, drug makers Biogen and Teva cut 300 positions each. Twilio cut 11% of its 8,000 employees. Warner Bros. Discovery cut hundreds of jobs this month. Wall Street investment bank Goldman Sachs is cutting 5% of its employees. We have heard from a number of investment banks that deal flow is down dramatically this year. Banking giant Citigroup cut 100 employees from its home mortgage division. As you know if you have been following this channel, demand for mortgages is seriously down this year. Raging inflation and interest rate hikes have reduced mortgage demand. Credit Suisse is cutting 5,000 jobs as the international banking giant deals with the aftermath of a financial scandal. Snap, the developer of mobile app Snapchat, is cutting 20% of its employees, or around 1,200 jobs. Bed Bath & Beyond is laying off 20% and closing 150 stores. Brand management company VF Corporation cut 300 corporate jobs and another 300 unfilled job openings. Mortgage company Better.com is having its third round of layoffs in the past 12 months. DataRobot, the Boston-based artificial intelligence startup, is making its second round of layoffs since May. Automaking giant Ford is cutting 3,000 employees in India, Canada, and the US. Boston-based Wayfair 5% or 870 positions. Apple cut 100 contracted recruiters because it is slowing hiring dramatically. HBO Max eliminated 70 jobs, which is 14% of its overall employee base. Canadian social media giant Hootsuite cut 30% of its 1,000 employees. Groupon is laying off 15%, which is 500 employees. CEO Kedar Deshpande said, "Our cost structure and our performance are not aligned." iRobot, the household robot maker, cut 10% of its employees, or 140 positions. If you missed the announcement, iRobot is being bought by Amazon for $1.7 billion. Walmart, the nation's biggest private employer, cut 200 corporate jobs. Online stock brokerage Robinhood cut 23% of its employees. Shopify, the e-commerce giant, cut 10% or 1,000 employees. Vimeo cut 6% of its employees. Cryptocurrency exchange trader Gemini cut 68 employees. Electric car giant Tesla cut 229 employees, shuttered its autopilot division, and shut down its San Mateo, California, office. You probably all remember high-profile CEO Elon Musk famously saying he had a super bad feeling about the economy and planned to cut 10% of his workforce. Loandapat, the California-based online mortgage company, cut 2,000 employees. This is Loandapat's second round of layoffs this year for a total of 4,800 positions laid off. Max, the real estate broker, cut 17% of its workforce. J.P. Morgan Chase, the largest bank in the United States by assets, cut 1,000 jobs. Cryptocurrency company Coinbase cut 1,100 jobs or 18% of its employees. Used car dealer Carvana cut 12% of its employees. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.